As a friendly reminder, this content should not serve as any financial advice, and this content is to be used for entertainment and educational purposes only. Check it out. Welcome to the third episode of the XTZ.News podcast. We're in for a very special bonus episode today. Today I am joined with Alan Blair, the founder and managing partner at REI Capital Growth. Alan, how are you doing today?
I'm doing great today. Pleasure, Vince. Thank you for inviting me for this interview.
Yeah, I really appreciate you reaching out. So I always try to start every conversation of the show with how I meet the individuals that I bring on. So could you kind of just tell the audience how we met and how you found me and all of that?
Sure. I'm a customer of Ferraiuolo as a commercial real estate issuer of security tokens, and I noticed on LinkedIn that you did an interview of Dave Hendricks, who has become a friend. And I watched the whole thing, and I reached out to you on LinkedIn to connect. And 5 minutes later, we were connected. And 10 minutes later, we were communicating and talking.
Yeah, and that's one thing I could appreciate, about you right off the bat. I can tell you work fast. You know what I mean? And I can tell you're always on, quick to respond. So I mean, tell the audience about how you operate.
As a entrepreneur and as somebody who's been working on trying to build this business for quite some time, you can't waste any time. You have to try to respond to people and get their attention and earn their trust. And so, somebody said once, when you're in business for yourself, you're the CEO, CFO, chief cook, and bottle.
You got to do it all.
You got to do it all.
Yeah. So I mean,
I'm trying to get to the point where I can offload it to other folks.
Yeah. So I mean, you come with 35 years of experience in the commercial real estate market. Can you, before we kind of get into the news, can you explain to the audience what your background is, where you're from, what your experience is, and what drives you?
Well, you don't want me to go too far back. It's going to take too long.
I'm here all day, man.
35 years. I started in a family business with multifamily apartment buildings in New York City. We started with a 50-family building, and we had a second 50-family building. We operated those 100 families for 20 years. And along the way, we had another 150 families among 4 buildings in the middle of that. I escaped to New York in the end of 2006, the beginning of 2005, transitioned into beachfront luxury condominium hotel units on both the East Coast and West Coast of Florida. And that was right before the big economic crash. And then the oil spill catastrophe in the Gulf. And so the timing was terrible. But the timing was good because I sold the properties in a 1031 exchange at the top of the market, when the prices were great. But when you 1031 exchange at the top of the market, you have to buy in at the top of the market as well. I also acquired at that time some zero cash flow CVS properties. Mm-hmm. Zero cash flow, which is absolute triple net. There's no management involved in anything. And it's mostly debt. So I put all the debt on the CVSs, and my income was supposed to come from the condo hotel units, and they're luxury units. I mean, there was concierge service in the property, and the income was pretty good for the first couple of years until the economy crashed, and then it went to zero. But I was fortunate in that I did not. I wanted to mitigate the risk, so I didn't put any debt on those condo units. and that worked out. So I survived the economic situation, and then I 1031 exchanged out of all of that again, and I got into multi-tenant retail, and never looked back. So I did that for our own account, my own family's account, and and got into it from the ground up, understanding it inside out, upside down, and backwards. And then I started putting together friends and family deals to put together syndicated deals for multi-tenant retail, and been doing that for the last 10 years. And we acquired 8 properties. We had $32 million of properties under management at one point. We sold the first one, so it was about $30 million of properties under management now. And with all the lessons learned along the way, I decided to, I'm always an entrepreneur. I'm always trying to come up with new ideas and trying to solve problems. And I came up with this notion of REI Capital Growth. And I kind of reinvented how you invest in a real estate fund. Nobody's investing in a real estate fund like this.
Yeah, and I can say that, from my research, I haven't seen anything anywhere close to what you're doing.
No,
correct?
No, there is not anything anywhere. Well, it's designed to mimic the way the large family offices invest and own their own real estate. So imagine a large family office, they buy institutional grade cash flowing real estate, but they don't need the cash. So what they do is they take that cash and they buy more real estate, and they become very, very wealthy and grow their wealth. I wanted to create a fund that allowed ordinary investors to invest and grow their wealth like the way the wealthy do.
Yeah, I mean, it seems like you're basically opening up new opportunities for people that have never had anywhere close to those sorts of opportunities. Correct, sir?
Exactly. And what makes it work is the fact that we're digitizing the equity assets, STOs, securitized token offering. And because of that industry explosion right now of digital assets, we can now make private companies liquid. And that was the one missing ingredient that prevented this from happening a long time ago.
So what have been the largest challenges with setting something up like this?
Well, there's been several challenges. One is the technology challenge. It took me quite a while before I settled on Vertalo. And, Vertalo was growing into this whole business as well. I just felt that they did it the way that was perfect for what I wanted to accomplish. That was one challenge. The other challenge is finding investors. People invest in real estate in certain ways. And traditionally, whenever you want to put together a real estate deal, you go to the broker dealers go to their family offices, and if they like the deal, you get the money. But over the last 10, 12 years, 15 years, all the wealthy folks, and even longer, they only invest in deals that they can make over large amount of money, and they invest in what we refer to as value add deals. So if I was a developer and I wanted to build a building, any kind of building, and I had a piece of land that was all locked up and I controlled it, and I got an architect, I'm going to build it, and I already got a bunch of tenants lined up, I could go to these same folks and they'll give me 90, 95% of the money you need to build it, and plus allow me to make a nice profit. But then 5 years later, they want me to sell it, and then they make all the profit. So this business model that I've created for that is suitable for liquidity, suitable for the blockchain, that's suitable for international investors, cross-border investing. That doesn't work with a value add, build something, hold it for 5 years, 10 years, and then sell it. I mean, liquidity is supposed to mimic what happens on Wall Street. And, the successful businesses on Wall Street, they're permanent businesses. They don't last 5 years and shut down. It's a perpetual company. The investors may come and go. That's liquidity. But the company is a perpetual company. So this...
Yeah, and I think actually the average person has a really construed viewpoint on like the definition of liquidity, right?
Right.
And well, I don't want to go too far down that rabbit hole. Let's try to back it up a little bit and just talk about the STO.
Okay.
Talk about how it's structured. We did a little bit of a prelude on the website, but let's talk about really how you did it, how you're planning to launch it, and really anything you're comfortable sharing, sir.
Well, I want to share everything because the only way folks are going to invest in this fund is if they understand what it is we're doing and why it benefits them, right? So the STO, we are offering 2 STOs, one for equity and one for debt. The equity STO, let's talk about that first. As it mimics what I described earlier, the way wealthy invest. Typical investor would go to a REIT and they would get dividends on a quarterly basis, an annual basis, and they call that a fixed income product. But like I said, the family offices, they don't need the income, so they roll it over and buy more real estate. Well, that's what this fund is going to do. We're going to take the income, and we're not offering dividends, and we're going to buy more real estate and grow the value of the portfolio. Now, that serves a couple of really good functions and solves a couple of really good problems. One is, in the current state of the real estate market in the United States, there's not really a lot of, we're buying stabilized properties, fully occupied, 90 to 100% leased in great locations with great tenants. And we're paying a really good market price for these properties. So once you acquire a property in that condition, you're buying a cash flow stream. There's not a lot of room for growth in value over the next foreseeable several years. So it's not going to increase in value just organically like it did over the last 10 years. The last 10 years it did. But it's been floating around. The prices have been floating around at the top right now. So the one problem this business model solves is that investors can invest in this and their share of value, their value of their equity will grow because we're growing the size of the portfolio, and it's not dependent upon increasing the price or the value of the individual piece of real estate. That's a key distinction.
Yeah, and can we talk just a little bit about the fact that you're doing this on the Tezos blockchain and how you made that decision, how you came to that conclusion, and maybe what your experience was with Tezos before this?
Actually, I had no experience with Tezos before this. I wasn't even aware of it. I was looking for a technology provider, a vendor that had more experience, more knowledge about the whole thing than I did and could solve that problem for me. So that was Dave Hendricks over at Ferraiuolo and his team, his real estate team. So I had no idea which was better or worse or indifferent. And Dave explained to me that, the transaction costs and the speed and all that Tezos is.
Dave broke down the tech specifications for you and made it easy.
And in very layman's terms, yes. In very layman's terms. And listen, we established a relationship where he doesn't make me do anything or force me or pressure, but
Yeah, Dave's great.
he gives you his opinion, and his
And then,
opinion
and then he lets you roll. Like, because,
and
yep.
his opinions are always in my favor, my benefit. So I run with it.
Yeah. So I've come to the conclusion very, very quickly, that's the way Dave rolls. He'll tell you like it is, let you make your own decisions, but you typically want to listen to him. You know what I mean?
Absolutely. And when it comes to real estate, he wants to listen to me.
So let's talk about, the 50 million in equity, the 50 million, bond STO, and kind of how all that ties together for the audience, from a general perspective.
I have to finish the benefit of the no dividends piece on the equity side. So there's the growth piece, which is critical. But the fact that there is no dividends gives us another advantage in that now with no dividends, investors from all over the world can invest in this asset class, U.S. commercial real estate. And the reason is U.S. tax code. So when an equity shareholder of any equity shareholder gets a dividend, that equity shareholder, he's an owner. And when you get a dividend, that's profit. And profit is taxed in the United States. So when you distribute a dividend to your investors, if that investor does not have a U.S. tax ID, then Uncle Sam wants me to deposit 30% of that dividend with the IRS. And then that investor from wherever he is in the world can let it sit there forever, or he could, maybe file a tax return someday, which they never do. So it makes investing from non-U.S. citizens into the United States without a U.S. tax ID, for all practical purposes, not going to happen. The fact that we're not doing dividends means it now can happen, because when that equity share trades on an exchange some point in the future, that is not a taxable event for the company. I don't have to report it. It's not a taxable event. It's a taxable event for the investor as a capital gain in his country. So there's no exposure to U.S. tax for that equity investor. And that's a key to allow cross-border transactions freely. So that's the idea.
Yeah, that is incredible. I mean, I could not be more impressed by what you're doing, and I think it's amazing.
Well, thank you. The other STO is the bond. So we're issuing bonds. We're priced it. With the yield, we tried to work it out so that way. The bond will replace mortgages for the real estate we acquire. We want to control both sides of the capital stack with the real estate we acquire, the equity and the debt. So, and that way the return for equity is very, very predictable, and the interest payments on the debt is very, very safe because we control both sides. The neat thing about the bond is that there's another IRS exemption, that if I borrow money, which selling somebody a bond overseas from a non-U.S. citizen, if I borrow money from a person and I'm purely paying interest and principal to that person, all right? There's no fancy Wall Street preferred equity or convertible bonds to equity, no variable rates, none of that. This is all just pure interest and principal payments. Then there's an exemption in the IRS where I don't have to withhold 30% of the interest payments I pay them, because when I borrow money from a person outside the US and he earns interest, he's actually earning interest in his country. He's not earning interest here. So it's not a taxable event here in the United States. So I can pay interest for folks that want income backed by U.S. commercial real estate. I can pay them interest, and we set it up to pay it quarterly, with no U.S. 30% withholding.
Yeah, I mean, absolutely insane and just incredible. I mean,
Here's the other really cool thing about that. Think about, like I said earlier, when you own equity, you're an owner, right? And if you're an owner, and if anything happens, like happened this past year with COVID and everything, with all the real estate, who gets paid last? The owners get paid last. With the money that's coming in, who gets paid first? You pay your bills, you pay your real estate tax, you pay your mortgage. You take care of the property, your employees. The owners get paid last. So a lot of the REITs on Wall Street, a lot of the private equity, there's a lot of including my own investors for my existing properties. They're disappointed because I can't distribute income to them because the profits are down. But if I have bondholders that are the debt, who gets paid first? The debt. The debt gets paid first. So that makes the income that they receive from this bond STO anywhere in the world very stable, very secure, and even with COVID, wouldn't be interrupted.
wow. I mean, I only got one word for that. So one thing I definitely want to touch on is you have a lot of awesome partners, right? So I mean, you already kind of mentioned Vertalo, so I think that is a good place to start. But I mean, you got a lot of big names: Coinbase, DocuSign, Morgan Lewis. So can you kind of tell the audience what your relationship is with each of these organizations, right? And
Sure.
and how those relationships were formed and how they'll be
Sure.
moving forward.
Okay, give me 1 second. Let me see. I could pull up a list of them all and bring it up to my memory. um, so Vitalo, I talked about. Coinbase. Again, I was introduced to Coinbase by Vertalo, and we talked to the institutional representative there, and we opened up two accounts: one account for the equity and one
Hmm.
account for the for the debt, because we made two separate entities,
Hmm.
and we did that for SEC purposes when we could do the Reg A Plus, become a public company. Um, and that allowed that those accounts, those business accounts, will allow us to accept any of the cryptocurrencies that they currently work with um, for investment. So if somebody's sitting on, $10 million worth of Bitcoin, and he wants to take some of his profit that he's just made over the last 6 months and take it off the top and invest it into something more stable and secure that's not going to fluctuate up and down, he could invest with us through our Coinbase account. We'll instruct Coinbase to convert that to dollars instantly, and the dollars will get put in our account, and we now have an investor. And that equity or bond investment will perform as advertised, hopefully.
Yeah. No, and,
Um,
and honestly, even beyond the Coinbase and the Vertalo thing, seeing DocuSign on there really made me happy because we need more organizations working with companies in the crypto sphere that people outside of crypto understand and feel comfortable
yes,
with, right? And I
yes,
think DocuSign is an excellent example of that. There are tons and tons and tons of people who have interacted with DocuSign that
right,
have no idea what Bitcoin even is, right? And
right,
and we need to build those bridges, right? We need to make those connections in people's brains and
yes,
be able to show them this is how it's done properly, right? And
mhm,
this is how you run an operation properly, legally, et
yep.
cetera, et cetera. You know where I'm
And
going with this?
yes, I do. And the neat thing about it is the our DocuSign account is fully integrated with the Vertalo sign up process as well. So it becomes one smooth, seamless process. Now, we could have chosen one of these other online signing companies. There's a couple of them around. But Vitalo was already integrating with DocuSign. And I thought that they had the broadest brand name globally and would serve us well.
Yeah,
And
I think it was an excellent choice. I mean, I've interacted with DocuSign a lot in the past, and it's very simple, and I know a lot of people feel comfortable with it. So I think using something like that people in and out of crypto are going to feel comfortable with is an excellent move.
Right. Another partner is Netkey. Again, another Vitalo recommendation. Although there's several excellent KYC AML entities here in the States that have really wonderful automated processes. But I got on the phone with the CEO of Netkey, and he explained to me a lot of the nuances and the differences between what they do and everybody else. And it's state of the art. And I negotiated a good startup fee, and then a pause and wait until we get up and running. And so he cooperated with me, and he was already integrated with the Vitalo process. So it became a perfect match. We've already tested it out. So the way it works is once you're going through the online process, it is time for the KYC AML. They will send a text message to your cell phone. You download an app that's private labeled for REI. And you go through the whole, selfie thing. It's me, and then your ID, and you take a picture of that, and then they run it through all their algorithms and check the lists of the world and do all they do, and they come back all in one smooth step, either pass or fail. And then once it passes, that's when you get to the DocuSign, and then you get the documents, and then you click, and you sign it, and then you get to the point where you how do you want to transfer your funds to fund your investment, which brings us to Coinbase, or another company which we have accounts with called AFEX, AFEX, and they are a global payments and FX risk company, and so we have accounts with them. So you can do wire transfers from anywhere in the world. They will convert it from whatever currency it's coming in into US dollars and get it into our bank account within 24 hours. And they will also handle interest payments going back out. They will also handle that going back out. I think they have 180 different countries. So that's another vendor that we're working with.
Yeah, it sounds like you found a really excellent way to kind of tie all these different pieces together in a way that makes beautiful sense.
It took a long time. It took a long time because
how long did it take you?
I've been working on this for 3 years.
Wow.
And you talk to a lot of these companies, and they can do all things for all people all the time until you get down into the nitty gritty, and then you find out, well, that's not going to work, and then you go to the next one.
So I'm looking at some of the stuff you sent me, and it's looking like you're projecting over 10 years, 40 million in equity to go up to about 80 million in equity over a 10-year period. That's my understanding.
So yeah, 40 million. We originally created that chart. We were looking to raise 40 million, but we increased it to 50. But that's the effect is the same. We project confidently that the equity should grow in value to double every 8 to 9 years, fairly consistently. It's a compounding effect because we know at what price range we're going to buy the real estate, and when it's fully stabilized, we know what the profit's going to be from day one, with a slight fluctuation, but we build that in. And because of the nature of multi-tenant retail, the revenue stream is fairly predictable over time. There's some risks associated, but you build in some factors for that. And by the way, we've built over the years an analysis package that helps us analyze the each property on its own, and every lease, every month, every, for over a 10-year period, and estimate, turnover and everything. So it's a very it's a fine science that we've worked out over the years, and we know how to do this.
Yeah, but at the same time, you wouldn't be able to launch this sort of product to the audience base that you are looking to serve without the use of the Tezos blockchain, correct, sir?
Well, right, and the Tezos blockchain, as I understand it, and again, I'm a novice, you know more about it than I do, is that it's fast and transactions are inexpensive compared to the other ones. And some of the transaction costs are large. I didn't even know how large they were on some of the other blockchains. So Tezos really facilitates liquidity nicely, as I understand it.
Yep. So, if someone is watching this podcast and they're interested in your offering, where can they find information about you? How can they contact you? How can they get more information on the STOs? And where should they go?
Well, our website, www.reicapitalgrowth.com. We're working on a new website, but the existing website is chock full of information. It's got a video. It links to our YouTube page where we break down a couple of videos, and it really simplifies the understanding of our business model. And you can contact me right there, direct email, or even book a call with me right from the website.
That's amazing. So I have to wrap up every episode, by asking the same question. So you're located in Connecticut, correct?
I'm in Connecticut.
So if I came to visit you, where are you taking me to eat, and what do we have to have that I can't eat anywhere else? I can't eat in Texas. I can't eat in California. I can't eat in New York. What do we got to have?
I'm afraid I'm not a real foodie. I'm not a restaurant guy. My wife's Italian. You can't get better food anywhere than home.
I agree with that. So we're on the same page there.
You come to my house, and I'll have my wife make something special for you. How's that?
That sounds perfect. Look, thank you very much for your time, sir. And any other wrap ups, shout outs, anyone that you would like to give some credit to?
I would like to give a shout out to Dave Hendricks. He's been very good to me, and he's become a friend. And I'd like to shout out to all those Tezos guys out there for doing what they do, and facilitating, even though with an invisible hand, my connecting to you.
Definitely. So thank you for your time, sir, and for everyone tuning in. Thank you for watching this episode. And if you want to, follow what's going on, be sure to follow XTZ.News on Twitter. Check out the website, XTZ.News. And we all appreciate your time. So have a good night, day, wherever you're located at in this universe. Thank you.
Thank you, everybody.
Check it out.